everyone. Welcome to the Forex chart review. I'm going to dive into a couple of, well, more than a couple, several currency pairs actually. There's been a lot of interesting developments over the last week. As you know, this week and last week, there's a lot of interest rates that have been released. So with all those changes comes very strong volatility and moves that kind of accelerated some trade ideas that kind of have been brewing. So you know what? I'm going to dive into all the ones that I've highlighted in blue here. Okay, so the first one that I see is AUD CAD. And from what I could tell the first time, right, as you can see, this Fibonacci, when it came down to this low here, it pulled back pretty well to the 618 and then slowly has been dropping since. When it finally broke through this area and made a new low, I grabbed another fib retracement. So that's kind of where the idea is with this trade. It's right on the 618 line. Judging from how this one happened previously, I just set the stop loss a little bit higher than that 786, specifically because I can see there's a lot of volatility here. But if we take the volume and we draw it all the way where you can see the giant bar has been consolidating, it's exactly at that 618 throughout all of this too. Okay, so what happened is it kind of broke through that volume the first time here, but never wanted to close above. It seems that it's being drawn back to there in order for it to go lower. I would say, judging with the fib channel, the fib retracement right there, and EMA that's going to be pretty close by is the white, I have a feeling this is going to be a very strong trade idea. If we take a look at the daily, you can see that that pink EMA, which is the 55, is pretty much right on top there. So if we have one more sharp push up, either Monday or Tuesday, right, that'll be right within entry. My guess is maybe even here. But I'm going to leave it right at the 618. It's only a 43 pip stop loss. I do not expect it to come all the way up here. This is where a lot of volatility in the volume played out. Okay, so yeah, I think we're just going to see maybe one or two more green candles until this is triggered, and then a strong drop. I don't even think we will see an EMA shift on the daily because of that. This might just be a very long wick that triggers and down it goes. And again, I did a very tight profit, but because of what I saw on the daily, it was something like this, right? So we went, let's draw it from not that entire peak, but this pullback, right? So if we draw it from there to the low, that was here. You can see 618 kind of hit that area twice, but didn't go higher the second time. So if we lower it to that and this area, right? So I mean, that was the sharp pullback on the way down. But if we go all the way to the bottom there, you can see the rejection right off that 886. So that was a very deep retracement. So because of that, what it looks like is we did not actually make a newer low past that one due to that deep retracement. So we might have a play within a play. Okay, so if we go up, right, and I'll just delete this so it doesn't look so messy. If we go up, drawing from this low to this high, you could see that it rejected off that 786, and it's been kind of sitting in that golden zone for the last 4 days. Okay, this is kind of why I expect a pullback, but not all the way up to here. However, if we do, this is a very nice candle pattern to jump in on. The trouble is, though, there's a big wick before it and after it. So I don't see us actually getting to this height. And there's really no volume up there. It's all here. All right, so based off of that, that's why I'll take the entry where it sits here. And moving on to AUD USD. What I see here, this zone is kind of what I expect. Well, I was expecting for a reversal. So if I jump on the 4 hour, okay, originally fib again going from this high down to the bottom here. You can see that it made a deep retracement, but it was still in the 618, and it looked like that 987 was that liquid resistance right there, and down it went. Right? It didn't make a new low, however. So that's the one curious thing. I think, again, one of those moves within a move, right? So if we draw up a fib from this low to this high, you could see that, oh, if I just delete this one right there, you can see that it kind of hit 618. It's been sitting around that territory for a little bit, but it does not want to go higher. So that's why, based on that one, I'm going to use this short-term fib analysis to take us down to that long-term fib retracement area, right? So 400 pip drop, I would say I expect within the next week or two, right? This is going to be a very nice trade, a 13-to-1 risk to reward ratio. It's a tight stop loss of 30 pips. Even if you go 60 on this one, you know, it's still very good, 6.7 or 6.6 to 1 based off of that. I think it's going to be a very nice trade. So I'm going to leave it at that. You know what? I'm going to go 40 pips just in case that white EMA line ends up being liquid resistance as well. Okay, so overall a 10-to-1 RR. We'll see how that goes and how that develops. Euro AUD. From what I drew on the short term, it was a Fibonacci from that high to this low, and in this consolidation, you can see that. Right now, it rejected off that volume and right off that 50 Fibonacci as well. So kind of two dual indicators, and then the long-term fib channel, everything kind of happened right there. Okay, so I mean, if I drew that up, you know, 3 days ago, that would have been really nice to see that potential move, but here we are down at this area. What I've noticed before is the volume acts like a magnet, so very likely it might pull up to this area once again. All right, and I would just do that stop loss slightly above these highs, so 40 pips is reasonable. All the way down, this could be another very well worth trade, 14-to-1. Okay, so I'll set that up here. If it doesn't pull back, then it doesn't pull back, right? Like right now, we've had an EMA shift on the 4-hour, so entry would have been ideal on Friday. Oh, pardon me. It would have been ideal on Friday or even Thursday, right? Late into Thursday, to grab it off of this particular candle pattern. But as history shows, there are typical pullbacks that will happen, so I have a feeling this will be a good area to take that trade on. Okay, Euro CAD. From what I've seen, it's a lot of volatility over the last few weeks. Okay, you can see large wicks, large candles, everything's there. But what I did see here is a nice institutional on the 1-hour actually. Okay, so right there, drawing it right across, just off that fib channel too, and a lot of volumes have been building up. So if we switch it back to the 4-hour, you can see that it's not making new highs every single time. It's going slightly lower. So if we go from here to here, right, didn't even touch that area, there's a very good chance that it will return there once more. And when it does, this is a very nice snipe to grab. So another potential 11-to-1. Like this is lining up to be a very good week. CAD interest rates came out. Personally, it sucks because my mortgage increases again. However, for the trading aspect, it is very good because all this volatility here kind of built up a lot of volume. So I expect one more push upwards before a drop. Right, so now Euro GBP. The two things that stand out here, pardon me, yawning and gas and holy, lots of stuff going on with me tonight. Anyway, so right here was kind of off a previous resistance line, okay? So judging from where it hit before, you can see here that's where it started to develop, and it kind of broke through, and that's where it started being used way back in 2021. It hit that area once again, but as you see, when it hit the first time in June, now in September, it did not break those previous highs. So this is shaping up to be a very nice trade as well. Rejecting off that historic resistance. And also on the 4-hour time frame, you can see strong divergence, right? Especially off the signal lines. So signal and candle is really just price versus price, right? Where it actually is compared to how much interest there is in taking it higher. So right now, it's really steep going down, very strong divergence that I see right there. Very likely this is going to continue down, and I want to jump in on that EMA shift, which will be right at open. It's the only volume that I can see playing out to is down here on the extreme zones. Anything else is just not really going to play out as one would expect. So again, a 52 pip stop loss is reasonable. My first TP would probably be this volume area here. So it's still 146 pips. So that's nearly a 3-to-1. It's like 2.8 to 1. Still a pretty decent trade to enter on. Overall, 5.5 to 1 on this is looking pretty good, especially if we draw it up where we had the volume built up here. Right? You can see that the final TP I would probably have it maybe at 300. So 5.7 max is what I would be expecting on this run. Reason being is because euro has been stronger than the British pound as of late. It hasn't made a new high, so that kind of tells me it wants to start consolidating once again. Best case scenario drops all the way down to the support line for this to be just over a 7-to-1 risk to reward. So we'll leave that there, see how entry goes, and move on to Euro NZD. So this one, again, quite strong. NZD is second highest interest rate next to Canada. And as you can see, it did play off the 618 once here. This one doesn't count because that's the low, right? If this was the low, that would only be like a 328. So anyway, it did make a higher high, though, past that. So I'm a little skeptical about taking this type of trade. The only thing that it really has going for it is the signals, the signal line here to show divergence, but the trouble is the histogram is showing convergence, right? So this is lower than this one, this is higher, so it's really, I'm not 100% on this trade. It is definitely a possibility, maybe with the sell stop, and already it's sitting at 61 pips, right? You can see the huge volatility with these candles. I am not very excited with NZD pairs. This is something I would probably stay out of. Just a little bit of an idea. If I were to enter it, it'd have to be like a 3.3 to 1 with 164 pip stop loss. That's just not worth it, to be honest. Like there's better trades to grab. So Euro USD. This one's got me very interested because I drew 3 volume zones, one of them being a large consolidated area from July 18th all the way to August 9th, so 3 weeks worth, and it's right there. So you can see my stop loss that I set is kind of going through that line. The reason why I set it there is I don't actually expect this to come higher because that volume, it looks like it played out in this area here and it created a new line. That would be its current magnet, right? So you can see it's starting to pull up, but right here, this one, all this built up volume is caused by this area here. So what I can see happening is a little bit of this, something along those lines before it finally makes a move. If it does cross this area and ends up going up, I'm not going to take a sell limit at any point here. I'm going to wait to see how high it actually goes, maybe rejecting off this line. But once it crosses an alert that I'll set right now, all right, add alert. Crossing sell entry zone. Okay. So alert is set, so once it crosses through that, I'll be made aware of this Forex pair. and very likely I'll be taking a sell stop. So I'll wait for the candles to kind of drop and enter me in rather than pop up and catch the falling knife, so to speak. Even though we're trending, everything's trending down. It's been trending down for quite some time. I don't really expect this to really change much, right? The brown line hardly got touched, and it was back in February, that brown EMA, and then it's been the white that's been the liquid resistance right now. So that's exactly where it hit off of. It's a very good possibility. It's not even going to come all the way up to this area. The only reason why I believe it will is due to the volume. Okay, and yeah, so now I think we can jump on oil, because oil has been really irritating over the last few weeks, to say the least. Every time it kind of came to this area, as you can see, it came close, I would always take a buy. And sometimes it rode well, and sometimes it's just a huge reaction and bounced upwards. And then finally on near the end of the week last week, it broke through support, but it kind of bounced right back up. So judging with how it actually moved on the fib trend, right here, the trend-based fib extension, it's exactly what needed to happen to finally jump into that trade area and reject and go higher. Now, I just can't see it going any lower than what it really was. Like, I believed 84, even $85 was its support. And it wasn't crossing there for the longest time. Then it finally dropped all the way down to 81.20, right? Yeah, so that kind of threw me for a loop. I wasn't expecting it. There's really nothing pulling it down to that area except for maybe here. But this is a very insignificant supply zone, right? The only thing is maybe it wicked in there once. But even if I draw a Gann box in this area, right, for the last move down, you could see it kind of invalidated itself already. For it to be in play twice is very rare, right? And even here, you can see it slightly broke through, so that does invalidate it. This did go lower. And the way that it went lower, I think it was just kind of forced down there before it's going to be shot right back up. So, I'm going to be waiting on the 4 hour for, well, there it is. So 4 hour for EMA shift, I was just about to say, and there it was. But now the pink is acting like a little bit of resistance. So it's definitely challenging to be able to jump in it right now. Typical stop loss for oil, I would say, would be about $3. But for some reason, I just don't think it's done. If we take it from this low to the high, we can see that 618 was in place several times until it finally broke through. It's still in the golden zone. But again, it was just a little surprising that these two areas are very valid. It even hit there 3 times and then finally broke through. So, I'm not exactly sure what to think anymore with oil. That was the surprising bit. I thought it would have been done right here, but it did drop a little bit lower. This, however, could be the final move, right? Maybe it's aiming to get around the 77 range. That's the lowest I could possibly see it going. And right now it's hovering around that aqua fib channel line. Okay, on XTI, where I drew up my trading, you could see that entry was ideally that's where it would have been, and it was just kind of, it hit the stop loss. That was a bit of a bummer. Okay, but yeah, so you could see that I'm not perfect. I do make a couple of losses as well. But win ratio is much better, I think, so we'll keep it at that. I do expect this to climb, but again, it's just a matter of time, trying to get it at the right exact moment where oil is going to be spiking up. It will be difficult, to say the least, just because it broke through the support. So I have to really look and adjust where it could possibly drop down to. Right, so you can see this was kind of the valid area where it's been dropped into. But let's see if we can find anything on the 6 hour or the 4 hour. And not really. Like, it was just the engulfing candle that we had there. And even here, it's not breaking that high. So very possibly we could still drop a bit lower. See, judging as to where we are right now, the pink is being used as a resistance. This engulfing candle really crushed through the entire structure, right? So all I can see is the play off there, and as you can see, it kind of went in and out. So it's very likely oil will be dropping some more. Yeah. Maybe back down to 80.9, maybe even to the 70s. Entirely possible. Yeah, I'm gonna stay out for now until I see a definitive move. Right now, it's just been several pullbacks, right? If we take a look at the daily, it's actually been falling quite obviously. So if we go from let's shrink that down a little bit more. If we go from this high down to that low, right? You can see very deep retracement past the 786 around that area. But now if we take this and we move it over to that high, right? So this is what I see. You know what? Let's start from the beginning. From that low, right? And then it started going up a little bit, right? So 618 was in play. The wick went much lower, but the candle closed there, and it was in play twice, right? So even if we take that low here, you can see the 618 was in play. It did not drop lower. It wanted to climb. So if we do the same thing and we use this candle as our low, right, to this high, you can see 618 is definitely in play. Same thing here, right? We take it to that high. It's almost in the golden zone where it wicked in, and then it kept going up, right? So then finally, in this move where it went up, you could see that it resisted once and it closed higher, and then it finally broke through it and then tried to go a little bit, and then we switched our momentum going down, right? So it went from here to this area in the golden zone reversal, you know, down it goes. One more time, down to about here, right? Because the first one didn't even hit the 50%, barely, right there. So even if we want to go and take it to that low, to this one, you could see deeper retracements to 786 before rejecting. So the last high was here, and to the lowest point right there, you could see it was 50%. And then if you take it to that, and then it made a new high, right? So I would be using that same fib line to draw it across. So every time it pulls back, it seems to pull back pretty deep, around that past 618 to 786, around there. So if we do the same thing based off of history, okay, and now we had our low drop, the likelihood for it to come back to this area is pretty good before it'll drop once more, right? So if I take, let's say, a sell, reasonable stop loss around there, but look at this candle pattern, like it's such a dead giveaway, right? The only trouble is on the 4 hour, it's nothing, right? It's just that. It's really on the daily that I can see institutional play, right? So if we go from wick to wick, from there to there, right? Entry would be much better taken around that area. And the potential $3 stop loss for it to go lower, right? 3 to 1 RR to be able to get that once again. You know, it could even go all the way down to almost a 5 to 1. I don't know. I'm not really that comfortable taking this. I've been burned already on oil, so I'm going to leave it alone for the time being. All right. Trying to catch it somewhere on the bottom is ideal for me. And then, but again, I thought we hit the bottom already, but turns out we didn't. So staying out for a little bit until I see a solid shift on the daily, right? If I get something as obvious as this one, maybe it'll be a good chance to jump in, but even still, you saw that it quickly turned for the worse, right? So that's going to be my target. I'll see if I'm right. And yeah, the potential for it to climb up another $10 before dropping is pretty good. So yeah, that's kind of what I expect for the weeks coming up, folks. Hopefully this has been useful for you. I'll jump into NASDAQ and SPY next. So stay tuned. Thanks for watching.